Hello, and welcome to the Block Solid podcast with Yael Tamar, where we talk about the evolution of the property market, the newest technologies that enhance and revolutionize the world of real estate as we know it, and how it influences the owners, the buyers, the renters, the investors, and the entrepreneurs who can benefit from it all. I'm Yael Tamar, CEO and co-founder at Solid Block, pioneer in real estate tokenization, and today I'd like to welcome a very special guest, Brandan Holt Dunn. Hi, Brandan.
Hi, Yael. Thanks for having me. It's an honor to be here.
Great. Brandan is the CEO of MultiFamily Office and the founder of Holt Accelerator. Another cool thing about Brandan is that he's also a board advisor for Solid Block. Hi, Brandan. How are you doing today?
Great. It's an honor to be here and honored to be part of Solid Block. Looking forward to great things together.
Amazing. All right, so I want to dive into some questions about family offices. Although we hear this term frequently, I think very few people really know what the family offices do. And also the cool thing about Holdun specifically, how you guys are focused on different types of assets and how you're so in the forefront of technology. So I want to talk about that and touch upon that. But I want to first kind of get to know a little bit about you and about your office. So tell me more about what you're into, how you got to this point.
Yeah, thank you for that. So we are, just a little background, we're a fifth generation family office. So it was started by my great-great-grandfather, Sir Herbert Holt, who came over from Ireland to Canada, ended up being extremely successful, controlled over 300 companies around the world, sat as a president or director of 27 major companies at the same time. And probably most notably, longest serving president and chairman of the Royal Bank of Canada for 35 years. Since then, we were a single family office for 4 generations, and now we're a multifamily office. If you want, I can kind of explain the difference of those two things, but that's kind of the background just to begin with without boring you too much.
We're gonna get there. So that's really cool. So your family business is what, like 100 years old now?
Roughly, just to date ourselves, yes.
Very cool.
There's still
So
my father. Go ahead, please.
yeah, so it looks like it's a very traditional business, and yet you're, like I said, at the forefront of tech and innovation. I want to understand, how do you guys combine the two, and how, on the one hand, you're a very traditional office, and on the other hand, you're out there, promoting the very new things in the field.
Yeah, it's a balancing act. I get it. As a family office, we have a generational view for wealth management. So we're not looking at how our portfolios for us or our clients are going to perform today or tomorrow or the next year. It's really 10, 15, 30, 40 years is our time horizon we're looking at. It's really the efficient transfer of wealth from one generation to the next. However, back in the day when my dad was starting on the management side, the typical portfolio for a high net worth individual was equities and bonds. The typical balanced portfolio, 60% equities, 40% fixed income, or, a range within those two asset classes. But, every sophisticated investor over the last 10, 20, 30 years has realized that that is not the most efficient portfolio. It actually has more risk and more volatility if you don't diversify into other asset classes. So we've done that as well. And what we believe in, given our family's background and reputation and experience in finance, that we can be most active in the fintech space. So we do invest in other real estate or other asset classes and other investments, but when it comes to fintech, that's where we're the most active. We can act as lead investor. We can provide a lot of experience, education, and support in either governance, operations, investment, and more importantly is a network. We can tap into our network on the fintech side. So not only are we good at it, but we do believe it's a great asset class. Finance is one of the largest industries in the world, something that we know, very extensively, and believe that we can add tremendous value to a company and therefore benefit both the company and our return.
Amazing. So maybe it's a good time to talk a little bit about Holt. So you are the founder of Holt. Why did you create an accelerator and not a VC, for example?
It's a good question. I think we want to get in early. That's where I think we can add the most value, and it's most exciting, right? Solid Block is an amazing company. I don't think we've been able to be as much provide so much value to you guys if you're already in your Series B, Series C at that stage. So we'd like to get in there, work really hard, put in a lot of effort and time into these companies, and the only way to do that is when they're starting. That's when most people need the guidance. They need the introductions to the network, and that's where we really enjoy and are passionate about. But so we founded Holt Accelerator because we are fintech enthusiasts. We are fintech experts, and it made sense to do that. And we are entrepreneurs at heart still. We like to build businesses, so we created the accelerator. And then everything we do in our business as a family office, we're the first money in our family. And then once we've made sure everything's working properly, we've covered all the legal bills and et cetera, then we then invite our clients to participate with us. So that's what we did with the accelerator. We created it, we put the effort in, we built the presentations, all that stuff. We invested our family's money, and then when everything was ready to go, we presented it to our clients, and whoever wanted to participate came along with us.
That's awesome. And I have to say, I've never seen a more professional team in my life, you know, and the value that's provided and the organization, like everything is on the point. I might do the Canadian thing, but I definitely have to say that you guys put your heart and soul in it, and we appreciate it, you know, as beneficiaries of all this goodness. So thank you for that. So amazing. So let's get back to the family office, because I mean that we've been a part. I personally have been an entrepreneur for a few years now, and I've been a part of a few accelerators. Family offices are really interesting because they're, like I said, they're kind of traditional, but yet you guys are now doing this new tech thing. In terms of family offices in general, right, out there, do you think that they're also getting on board with the fact that they have to diversify? Is that a common trend?
100%. It depends. Each family office is different, right? You can't kind of have like a cookie cutter definition of what a family office invests in, but more and more so, they are all diversified. You can't have a well-run business in general or wealth management firm in general if you aren't diversified across asset classes. Whether they do that in-house with their own expertise or they sub it out to third-party managers, that will differ between family offices. But yes, not saying they're all in fintech or early stage fintech, but they are all diversifying across real estate, venture capital, private equity. It might just be different industries or subsectors that will vary across different family offices.
And you said you lead investments sometimes. Is that also common for family offices to lead rounds?
Again, it'll vary. I think, yeah, it'll vary. I think it will really depend on the individual family office and what their expertise is. And then when they think that they are, very sophisticated in that sector or that specific field. Did we freeze? Can you hear me?
I can hear you. Yes. The video is
Oh,
frozen,
sorry.
but it's all right. Start over. Start a sentence
Okay,
over,
sorry.
and then we'll edit the sound. It's not a big deal. The video is not a big deal.
Yeah, you're back. Yeah, so family offices will invest. They will act as lead. Some will, some won't. Each family office will have their own investment thesis or investment mandate and how they operate. But I would assume that anyone that's acting as a lead investor would be in an area or a sector that they have deep experience in and also deep relationships. So not only they can provide money, they can provide smart money, meaning they can provide their expertise and also their Rolodex to help, enhance or accelerate their growth.
Cool. And you mentioned that you've become a multi-family office lately. What's the difference, and what do you do as a multi-family?
Yes, it's a very good question. So we were a single family office for 4 generations. Now we're a multi-family office. So a single family office means we're managing one client, which is our family. And we did that for 4 generations. And then when I came on board, I'm dating myself now, roughly over 20 years ago, we had some requests from some charities and foundations that we supported. They asked us to kind of look at their portfolios and review what was going on. And then after, giving them some advice, they started asking us to actually manage their money. So at that point, we realized that there was a demand and we could help other people like ourselves, manage monies properly, conservatively, but outperform the markets in over a long time period. So that's what we do now. We're a multifamily office, and we're a true definition of a multifamily office is where the lead client is the underlying family. So we were the original client. We're the largest client, and then we manage our family's assets alongside other people's. So other high net worth individuals, other families, or other charitable organizations. We don't manage any institutional money.
Okay, understood. And when you say institutional money, what type of institutions are you referring to?
That would be like pensions and stuff, mainly pensions or institutional be non-privately owned, more, government entities or pensions. I would view charities are technically institution, but we see them as a sophisticated investor that we're happy to support, but we're not managing a company's pension plan or anything like that.
Understood. All right. So talk a little bit about your real estate activity within the family office.
Yeah, we obviously, as a family, or most people, we've owned private real estate through our whole lives. Everyone has. We've never really had investment in real estate until recently. We really didn't have that much expertise in it. We spend a lot of time, and we are conservative, as you mentioned. We are Canadian, so by nature we're conservative, and we're a family office, so we're double conservative that way. But we do realize the benefit and the need for real estate in a portfolio for either ourselves or for our clients. We were lucky to work with a team recently that has helped us really understand and appreciate real estate as an investment. So we have two things that we're working on right now in the real estate space. One is in the kind of in the social impact space. We've invested in a variety of medical recovery centers for drug addiction and drug rehab in the U.S. That's doing very, very well. We're hopefully helping people recover as well. The other one, we're about to close on a large commercial boardwalk property as well, both of which would be, our first real large real estate investment products. And we're very excited about them.
Yeah, sounds really
and
exciting.
Hopefully to work with Solid Block to offer those type of investments to a large audience.
Absolutely, would be happy to. In general, out of so many funds that we've seen recently, this fund has definitely, touched me, because I personally had a friend who passed away from addiction. Actually, I have a few friends who struggle with addiction, and one close friend who passed away. And for me, when I heard about this fund, I said, this is something that we have to get involved with. It's a story that's going to touch many people. It has a social enterprise angle to it. And it's amazing when you can make money and do good too. It's a great combination.
No, I agree. It is a sad state that, I don't think there's many people in the world have not been impacted by drug addiction, in their life, not them personally, but know someone like you do and I do as well. So I agree with you completely. It's something that hopefully is adding value and a social impact to the population. We're at the same time generating a good return for ourselves and our investors.
Yeah, absolutely. And are you guys involved in any philanthropic activity as a family office?
Yes, we have our own foundation, the Holt Foundation, and we have its own specific mandate. So it invests or supports mental health and wellness, as well as education. So those are the two things we focus on in terms of our support via that foundation.
Okay, that's amazing. So you guys are doing, real estate and, well, first and foremost, I guess, the traditional, right? You also do stocks and bonds and what usually the normal portfolio, right? You do the fintech, you have real estate, philanthropic activity. Anything else I missed?
No, that's really it. Obviously, we have private equity exposure. We have general venture capital exposure. But yes, we every client's portfolio that we manage is customized to their own requirements. So some people might have a ton of asset classes in there. Some of them might have a small amount. It really depends on what they need, and what we will build a portfolio specific to them. So it's not like every one of our clients has the same portfolio. That would not be the way we operate. But from our family's perspective, yes, we have real estate, private equity, venture capital, and the traditional stocks and bonds.
And how big is
we
your
look
team?
at opportunity.
Yeah, sorry.
It varies. So we have teams in different countries. So we have Canada, Miami, Bahamas, and Cayman. I think we're roughly, just not including on the accelerator side, so just on Holdun, we're roughly about 30 to 35 people now.
Wow. Okay. That is a pretty big organization. That's really exciting. How do you personally keep track of it all? You seem to be everywhere, and yet you find time to be on calls with us and help us, move forward in our vision. Like, do you have a special advice on how to manage your time, or do you have a special way you do downtime, with hobbies? Like, tell me more about that side of you.
Yeah, I do have hobbies. I have less and less time for hobbies. I have 3 wonderful children and an amazing wife and a couple dogs and a cat. So very busy at home. So downtime is usually after the kids are asleep with my wife, hanging out, usually hopefully a glass of wine and a nice show. Hobbies are sports. I'm a sports fanatic. I played numerous sports my whole life. So whenever I can, I'm very athletic and try to get out there and do stuff. I
Yeah.
do think exercise is very important for anyone,
Tell
an
me
hour or
more
so.
what you do. I'm also a sports fanatic. So what kind of
Um,
sports?
yeah, I grew up playing soccer or football, as you guys is called
Yeah.
in Europe and everything. Tennis, hockey, and then I started picking up golf when I was older. My main sport was tennis. I played professional tennis in Europe for about 6 months before I realized I had a tumor on my spine. So
Wow.
I had to give up tennis and have surgery. And at that point, I picked up golf to give me something else to do. Living in the
Mhm.
Bahamas, I can't play hockey much anymore, but I do miss it. Um, and with my back, I'm limited in terms of the amount of tennis I can play. So there's a lot of exercise in the gym and golf and swimming, whatever my back allows me to do.
Okay, cool.
And then your question on organization,
Managing
I
time,
managing
doing
time. So
everything.
I'm very lucky to have met Dov Barron, who is a business coach, and he's given me a lot of support and guidance on how to manage my time. And he's also been very helpful in introducing me to an amazing virtual assistant, Michelle. So she kind of manages my time. I'm assuming she was on our emails with you as well.
Yes.
But what I've learned is that, and cut this out if it sounds rude, okay? So this is what Dov told me. Answering emails is someone that is like a $10 an hour job, right? So I shouldn't be spending my time answering emails. That's not the most efficient use of my time. So Michelle, who is very great and is more organized than anyone I've ever met, she will go through my emails 2 or 3 times a day and filter them and put the ones into folders, the ones that I need to respond to and the ones I need to read, and then she deletes the rest. So it's really, actually, we've been doing that for the last few months, and it's been a godsend. So I check my emails twice a day, and I know which ones I need to respond to, and I do, and I know which ones I need to read to, and that's it. And I can relax and be confident that during that period, I can focus on what I need to do, whether it's working with you, which is a lot more better use of my
A
time
lot more
than answering an
fun.
email, and a lot more fun. But knowing that anything that needs to be organized behind the scenes, Michelle will take care of.
That is amazing. I have to tell you a
Yeah,
secret. We have the
please.
same, but I have two Michelles. So
Oh, good for you. You're more important than I am.
no, I'm probably less organized than you are. That's why I need
Yeah.
two.
But it was great advice from Dov. So I've had a lot of time. So any advice I could give anyone is really, focus on what's most important. Answering emails is really not the priority. Obviously, there are some that are, but there's a lot of junk that we get on a daily basis. And don't waste your time going through that. I used to do that, answering 300 emails a day, and then I realized I didn't accomplish anything during that day. So focus on what's the most value add. Is answering
That's the
emails
most
value add,
amazing.
or
That's
yeah,
the most amazing advice, I think. For me personally, you just gave me an idea because there are, I do have that folder of things that I have to answer, and those are emails from my team. And, obviously there's nobody else that can answer. But then you think again and you say, yes, there is somebody else who can answer, that you can train other members of the team to take
yep,
responsibility. And also, lately, we've been kind of going over everybody's responsibility and saying, okay, just make a decision. If it's not an expensive decision, it's not an irreversible decision, just make a decision, go with it. Don't talk to me.
yep. Yeah, and
So
what we've also done, I agree to 100% support what you're saying, and we've also created, just to reduce email clutter. I realized that majority of my emails before were from my own team, and them as well. So we actually created, or not created, we did some research in our IT department. Donovan, who's an amazing guy, recommended a communication tool. So we have an internal chat, and we've kind of mandated that internal communication would be through the chat, not by email anymore, unless it's documentation needs to be signed. But not we could all do with less email clutter. So all internal communication is via chat. Whether it's, hey Brendan, there's an email you need to sign, it's on my chat, and then I'll answer my chat much faster than I'll answer any emails.
yeah, we also have Slack, but been slacking off when using Slack. So
Yeah,
thank
Slack was
you
one
for
of them.
this
We
motivation.
we yeah, Slack was one of them, but we chose another one that integrated with our phone system.
Yeah.
So we do not use Slack.
Yeah, awesome. Well, that's really helpful. So I want to talk to you a little bit about what's happening right now in the world, right? Uh,
Hmm.
is COVID good or bad for family offices? I'm
Again,
talking about
everyone is different.
COVID-19, by the way.
Yeah,
That one.
yeah. No, for my weight, it's not good. I definitely have gained 20 pounds doing nothing. But I'm excited to get back to the Bahamas and start exercising next week.
Mhm.
In all honesty, it is a horrible thing. It's a global pandemic. Millions of people have suffered. So there's nothing to take lightly here. And that is a tragedy. And hopefully the world will, learn from this and kind of gather together to you're never going to prevent another spread, but kind of be more efficient and organized as a united front in the future. And again, it's not meant to take lightly at all. On the investment side, if you're a family office, you can see it as two ways. One, there's an opportunity if you have powder, or cash available, because there are a lot of opportunities right now. And also, just like the market crash of 2008, if you have a long-term horizon, it's really, you just have to weather the storm. 2008 was a great buying opportunity. And if you go and look over the 20-year, over average returns of the stock market, it's just a blip at this point, right? Over a 20, 30-year investment horizon, it'll show up on the graph, but it's really not meaningful in terms of the overall return
Yeah.
during a longer time horizon. So, COVID's not been great. The stock market's recovered, but it really depends on your mentality. If you're a short-term investor, you probably had some serious pain during this time period. But if you have a very well-built portfolio, you can weather the storm quite easily and take advantage of some dislocations in the market. That's just on the investment side. Obviously, the pain and suffering that a lot of people on the in terms of their living and everything has experienced during this. There's been a lot of job losses, etc. That is horrible. And it is sad. But on the investment side, as a family office, it really hasn't had that much impact. Thankfully the markets have recovered, but you just have to, during downtimes is when you have to be the most, open and communicative with your clients and hold their hands.
Yeah. Were you thinking at that time when there was an original market crash, were you thinking, okay, it's going to go back up? Or were you thinking about we have to reallocate assets into, let's say, more liquid assets or more stable assets?
Again, it depends on a client by client, right? So everyone has their own portfolio. So there might be some clients that weren't impacted based on the mandate we have with them.
Yeah.
But it's always important, we're very conservative again. So it's not like we have 50% of our assets in e-liquid investments. We would obviously be suffering more right now. So we always ensure that we have a well-balanced portfolio, whether it's, no more than 5 or 10% in any one investment type thing. So you have that diversification, but you also have the conservative mandate around that. Sorry for my stutters there. To allow us to have flexibility. Did it recover faster than I expected? Yes, but I don't think we're out of the woods yet. It all depends. Everyone follows what the U.S. is doing. Their stimulus talks are breaking down. There's going to be volatility. The U.S. elections coming up, but volatility comes off market opportunities as well.
Absolutely. So I want to touch a little. I want to touch a little bit on what we're doing here at Solid Block, and we're very happy to have you as our advisor. What attracted you to our company?
Well, I've always been thinking about this. I'm just not as smart as you guys to actually implement it. Real estate, as we've talked about, is something we haven't done much on historically, but now we're getting a lot more active in it with a couple of big projects happening right now. But I agree with your philosophy and I guess your mandate and your vision on Solid Block is it's illiquid security, and the average person cannot get into any very good real estate. The average person's real estate exposure is their personal home, but it's very hard for them to get into a significant amount of high quality real estate exposure unless they're investing in a REIT. And again, all REITs are different as well. I'm not saying they're all great investments, but most of the real estate you're looking at is way too expensive for the average person to have access to, and their asset will be tied up for a meaningful amount of time for those people, whether it's 5 or 10 years, at which point you're hoping you can sell at a profit. And during that time, you're hoping that the yields are good enough to give you something to live off. So creating a solution that you can take an e-liquid security and make it liquid is extremely attractive. It just, with technology, it hasn't allowed that previously, but you guys have taken advantage of technology and used, very great minds to create a structure that allows that. So what it does, it creates an e-liquid security, makes it liquid, but it also allows people to, anyone to invest without having, a significant hurdle of investment, meaning you don't need hundreds of thousands of dollars or millions of dollars to get access to world-class real estate investments. So you've done illiquid to illiquid, but you've also democratized real estate investing and allowed the general public to take advantage of this, which is amazing on both fronts. So I think your technology and your mindset and your vision are spot on, and I'm just excited to be part of it and help support you guys in any way I can.
Thanks, Brandon. I definitely appreciate it. I'm wondering, so you guys are, a scale above a traditional investor, your family office. And I feel like we definitely need a lot more family offices in this game. So would you, in general, be prepared to invest in security tokens? Is your office going to get on board with the trend, right? If you have an amazing asset and somebody, maybe your client comes and says, we want to buy this asset, or will you recommend to your clients to buy this asset class?
100%. We have to, put our money where our mouth is. We're fully supportive of Solid Block and all the companies in the accelerator, and we're a fintech. We have a fintech accelerator. So a lot of fintech, there is the digitization and the the adoption of technology. So we can't sit here and support you guys all and not follow suit. So we are, but as a family office, as we said, we're always going to try it ourselves with our money first. And get comfortable with it before we, open it up to our clients. That's just our philosophy is, we'll always take the risk first. We're always first money in anything we do. So yes, we're already, as working with you on two fronts. Is one, looking at tokenizing some of our real estate and working with you and understanding how that works and seeing how it responds, or, kind of the response in the market globally, and the demand for that type of product. And from there, it gives us a lot more comfort from the family office side to expand our kind of investment in the space. But 100% we are on board with it, but we will try it first with our family's money. And then once we understand it and are fully educated on it, we will then open it up to our clients. But then as a company, as a family office, we're going to work with you on tokenizing a part of our real estate as a first step to adopting that technology in a greater sense.
Sounds great. So I'm wondering what it will take to get more family offices to start, like you said, number one, tokenizing their assets, and number two, buying and buying digital assets backed by real estate and diversifying their portfolios that way.
Yeah, I think it'll take time. As anything, family offices are not fast. They are slow and conservative by nature, majority of them. So, they're in no rush. They don't need to be the first one in buying Bitcoin at $100 wherever, right? They need to watch it and understand it, because if they have a 30, 40, 50-year time horizon, it doesn't matter if they buy Bitcoin today or if they buy it in 2 years. They're still going to benefit, but they want to wait and see how it plays out and really understand it before they dip their toe in. But it will get there. And also, most family offices don't really have that urgent sense of liquidity or liquidity needing, immediate liquidity. So they're okay having real estate and waiting 5 or 10 years to get their money back, right? Because they all have a diversified portfolio. They'll have their liquid bucket, their e-liquid bucket. So that might be a kind of detracting factor for family offices to get into the tokenization. But I think as it grows over time, it'll be more mainstream and people will be doing it, not on every single investment, but there might be a need. Hey, we think this portfolio, we do need some liquidity. So let's tokenize this and see how it goes, right? But it will be a learning factor. And I do think it'll take time, but we're happy to try to, push that along as fast as we can.
Understood. So you mentioned crypto assets. Do you guys have any exposure to crypto assets?
Not us personally. We do have some clients, and again, we're slow. We're watching it. Bitcoin is extremely volatile. It's not something that's great for a portfolio's overall volatility. I do believe digital assets are here to stay, but we have not gone full speed into crypto assets yet. But it is something we are actively watching and just seeing what happens.
Understood.
But if you ask me this in 5 years, I guarantee you we will have exposure and significant exposure in digital assets of some sort.
Gotcha. Well, I think in general, it's still difficult for institutions and family offices to get exposure to crypto assets because it's still kind of this new territory with security and wallets and keys and cold storage and warm storage.
Yeah.
There's still a lot that, that it's not fully standardized. So although it's starting to be, and obviously big asset managers are moving in that space. You have Fidelity, you have JP Morgan. They're moving it. So I think it's getting
Yeah,
there.
I think people just you hit the nail on the head. It's the risk associated with, right? You have all these hackers, your wallet's gone, you've lost your money. I think sophisticated investors and family offices are willing to wait to make sure the technology is there to be protected, right? The last thing you want is have your money stolen.
Yeah, absolutely.
Yeah.
Absolutely. So that's why we're actually working really hard at Solid Block to create, if we do deal with crypto, of course, we have crypto custody and crypto escrow and everything that's not on our end at all. And in general, to create these foolproof systems where tokens are managed so that assets don't just disappear in thin air. It's that's, I think, also one of the reasons why there's a reluctance on the part of individuals to digitize assets, because assets, they feel like I own something, it's not going to go away, it's not going to disappear. So we kind of have to give people this security, or a sense of security as well. So
Totally agree.
yeah, so I want to ask you one of the last questions I will ask today. Which advice would you offer for family offices or individual investors looking to get involved with fintech or new types of things like digital assets, for example? What should they do? How should they learn about it? How can they get ready?
They should come learn at the Holt Accelerator, and we'll teach them everything they know. And on the real estate side, they need to talk to you. You guys are
Great.
the forefront of what the real estate sector is doing. So I couldn't recommend anyone higher than you and Solid Block on real estate in general. And on fintech, I'm happy to speak to anyone, as well as Jan Arp and the guys on the Fintech Accelerator, Holt. But I think Holt itself is doing amazing things. They're a market leader in the fintech space, so we could provide a lot of education. But and you specifically on the real estate side. But in my personal belief, digital assets or digitization of investments isn't going anywhere. I think it's going to become more mainstream over time, and it is something that everyone needs to look at and start adopting.
Gotcha. Yeah, thank you for that. I appreciate that. And I just had an idea for you guys. So you've brought so many amazing mentors and coaches in the first week of the accelerator. We had like a few
Mm-hmm.
hours of talks, and we're just absorbing it, and watching it afterwards. Incredible value. So there's one accelerator that I really like that's called, besides Hold, it's called NFX, and they
Mm-hmm.
do a lot of video series. I think that if you guys do the same in fintech, it's going to blow everybody's mind. It's because I think you have a wealth of knowledge that very few family offices, for sure, but also VCs and accelerators have in that space. And I think that you definitely need to share it with the world.
Well, thank you very much. Yeah, I'll talk to Jan about that. We should put our heads together and see how we can do that. But any feedback and advice would be greatly appreciated.
Yeah, absolutely. Well, thank you so much, Brandan. You've been great. Thank you so much for joining me on Block Solid Podcast. Great having you and being, of course, our advisor, and help us with all kinds of things, introductions, and just being you. So this podcast is on Spotify and on Apple Podcasts. You can also find it on solidblock.co/podcast. If you enjoyed the show, don't forget to rate and review, spread the word. Thank you, Brandan. See you soon.
Thank you so much. Have a great day and good luck next week. I'm excited for the big event.